Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of July 4th through July 8th of 2022. Thank you for joining us for the live stream Clean Slate Trades. Glad to have you here. So again, this is part one of our weekly trading game plan for the week of July 4th through July 8th, and we're going to hopefully help you see how to trade the summer stock market doldrums and hopefully make money during the summer stock market doldrums. So we'll go ahead and get started. Just a quick reminder, Monday, July 4th is markets are closed for the U.S. Independence Day, 4th of July holiday. So we hope you all are having and we'll have a wonderful, long 4th of July holiday weekend. And again, we'll get started on how to trade the summer stock market doldrums. So what are the summer stock market doldrums? I've got a number of links to references that I will put in a comment to this video below, but just to kind of start out, the one definition is it's a sluggish period that the markets typically go through every summer, and we're kind of just at the cusp of that. People start going on vacation, kids are out of school, etc. And again, this is just kind of typical that from May to October, the stock market tends to be a little slower, weaker performance during that period. And again, this is just a historical period. And again, I'll leave this reference in a comment below. You can read it in more detail. Again, this is a historical average. It doesn't mean that necessarily this year will be like this. We'll see what happens, but in case it is, and it seemed like on Friday the volumes were a little low, a little light. People probably already went on vacation, so it's something to prepare for. If we see this kind of summer stock market doldrum, how do we trade it? How do we make money on it and get through it? So some of the things that this article recommends is to invest in well-established companies, spread your money out, diversify, and avoid, hype. So avoid stuff that's being pumped in the media, etc. So again, that's what they mean by the summer stock market doldrums. Again, this is a typical historical type of thing. We'll see if it plays out. But I wouldn't be surprised now that we're more into a reopening, more people want to travel, they want to get out, kids are out of school. I wouldn't be surprised if we saw lighter volumes this summer. So we'll jump right into it. We'll look at how the stock market ended up Friday. Again, it seemed kind of light. It was pretty choppy. This is the homepage for FinViz. You can find our affiliate link for FinViz in the description box below. You'll see we use FinViz for a lot of our market analysis, due diligence, etc. So, and again, in part one, we're going to do all our market analysis, collect all our data, and then we hope you'll come back tomorrow at 10 a.m. and we'll use that data to pick our stocks to put on our various watch lists for this trading week of July 4th through the 8th. So again, we can see the markets actually ended up. You can see they started up and chopped down and then eventually trended back up, although you can see there's still a lot of weakness under the covers. Most stocks are still below their averages, their 50-day moving average and their 200-day moving average. Part of that dip we'll see when we look at the economic data that came out. There was some ISM data and I believe some PMI data that came out. We'll see in a second. And when that came out, I think is what triggered that decline. Then as the market digested and recovered, they ended up. So some of the news, rattled stock bulls, pricing, worst half. You're going to hear a lot of this. Now that we're into the second half of the year, you'll hear that the first half of the markets was like the worst since 1970, the worst ever for the Nasdaq. The Dow was the worst since 62. So again, the first half, if you're looking at the markets going down, you're considering it bad. Now, Well, we've been saying this was a bear market and preparing for it since the beginning of the year, and hopefully y'all have been making money, playing, how we've tried to help you prepare for this, how to trade the bear market, how to use inverse ETFs, et cetera, to actually make money in this bear market. So, they're calling it the worst. I don't necessarily call it the worst. There's ways to make money in any kind of market, up, down, flat, sideways, whatever. So. That's one of the messages that we always try to convey. There's nothing to panic. BeachBum traders don't panic. There's nothing to fear. We can make money in any kind of market, and we're here to hopefully help you not panic and hopefully help you learn how to make money for yourself in any kind of market. So again, we are not financial advisors. This is not financial advice. I'll put up the banner for that. But, we're here to try to help all of our fellow BeachBum traders succeed. So if there's any way we can help you succeed in your trading career, please let us know. So if we look at some of the futures, we see oil, and we'll talk about this a little more when we see the futures charts, is energy actually took a decline at one point. Oil dropped down below 110, was headed to 100. Natural gas plummeted at one point. Now it's below $6. So if you had a position in coal, it was up 20-some%. One day, I think it was Thursday, it ran up 20%. Then we'll see it rebounded a little bit. And we'll talk about, how we can play that. We see gold shot up at the last minute, ran up a little bit. So that possible uptrend back towards 2000 in gold, we'll see. And then we see the indices, although it was very choppy on Friday, they all ended positive, and the treasuries yields really declined. Now they're all under 3%. I think 20-year was at 3.4, and now it's just above 3, and the others are below 3. So now we'll quickly look at some of the groups, the sectors, etc., the industries in FinBiz. Again, we have a video that talks in more detail about how we use this groups tab in FinBiz that we'd recommend. I'm going to go through it very quickly. You just go to the groups tab. This will show us the sector performance by default. So it defaults to sector. We can see the top relative performing sectors for Friday was cyclical, utilities, real estate, defensive, etc. Technology was the worst on Friday. And basic material and energy just went a little positive. Good morning, Tanvir. Thank you for joining us. Glad to see you here as well. And then we see weekly, it was utilities, energy were positive. Pretty much everything else was negative. It was pretty much a down week. And we'll see how the indices fared in a minute. And then relatively the worst or the least bad performers have been healthcare, defensive, real estate, utilities. So again, we saw rotation out of basic materials and energy this week. They had been running high, and what I think we're going to continue to see this rotation back and forth. People are essentially churning it, trying to make money, and that's not a bad thing. You just have to be aware of it and be ready for it. When we see these sector rotations, you want to take advantage of it. And so this group's tab here to show the sectors is a useful way to do that. We look at the industry performance. Again, we'll see uranium bounced on Friday. If you watched our weekly trading game plan from last week, you can see we were watching a number of uranium stocks. I didn't quite catch them right before they bounced, but we'll take another shot at them because we are seeing this kind of sector rotation. See gold, silver started to turn back up. We see some of the reopening plays bounced, etc. And then at the bottom, we'll probably see, with semiconductors have really been declining. They're in a steep decline. Micron, AMD reported bad earnings, bad guidance, and we'll talk about how we want to play semiconductors going forward for the long term. So again, the weeks, utilities, real estate, oil and gas, energy did generally well for the week. Basic materials probably kind of mixed for the week. And travel, apparel, retail is one of the worst, and semiconductors one of the worst. So those are areas that are getting beat up by our decline into the recession, inflation, etc. And again, we'll talk about how we want to play that going forward. So for the month, it was kind of a mix. And again, we saw a rotation out of basic materials and energy, who had been the top performers for quite some period of time. So that's kind of the industries and sectors that are trending right now. Again, I expect a sector rotation to continue, particularly in the summer stock market doldrums. I think you'll see some chop back and forth with the sectors. We also just exited the first half of the year, so a lot of these fund managers, they want to position their reports, so they want to show that they're in the top performing stocks, the FANGs, the big caps, and not in poorly perceived stocks. So we saw that may rotate back into higher risk as we enter the next quarter. So now let's look at some of the economic data we got this week. Saw durable goods was pretty good on Monday, which tells us that Powell's comment about inflation isn't really taking hold. He proposed that hiking interest rates would decrease durable good orders. Granted, this is back from May. So we'll see if that rolls over, but so far it hasn't taken hold. Pending home sales was positive, although again, this is backward looking, so these were already sales that had been in process. Tuesday, we see inventories was a little below expectation. Trade balance was negative. Housing prices a little down in April. Manufacturing. So we're going to see a number of these manufacturing economic data points that essentially are, in my humble opinion, again, not financial advice, but all these manufacturing front of the supply chain indicators that we're starting to see turn negative are indicators, again, that I believe we're already in and headed into a recession. So the front end of the manufacturing is already in decline, and we're going to see that propagate through the rest of the economy. KHC food, yeah, that's good. Gig work, yeah, we talked about that trend. I'm reading Tanvir's comments. EV, we'll talk about some news we got on EVs and semiconductors. Yeah. Target retail, I don't know. Mid-tier retail, I think, is going to get squeezed. We're looking at Big Lots. We like the discount retailers, and if you want to play the other end, it would be the luxury retailers. So again, we saw mortgage applications really dropped off. So that's the rollover in the housing. We're starting to see that. We talked about already going back last week that that's going to have repercussions throughout the economy, because people that typically buy homes also buy other stuff, right? They buy furniture, they buy home improvement stuff. The purchase of a home is a major impetus, a catalyst for economic activity. We're seeing a decrease, so that's going to be a decrease in economic activity, again, leading us into a recession. And then we saw these final GDP numbers come out for quarter one. These are revisions. This is not quarter two data yet. We'll get that in about a month. Several weeks, but this revision was very negative. Typically, they're just revising their previous estimates, but it came out negative. So the GDP in quarter one was worse than what they had expected, and that caused the market to decline through the beginning or the middle of the week. We also see these PCE prices. So again, this is inflation is still hotter than expected. So again, that inflation is still hot. GDP is turning down. And then we see a dramatic decline in real consumer spending. So the consumers have already started spending less. So again, that's going to lead us into recession. You'll hear other people say, and you probably know the majority of our U.S. economy is consumer driven. And so it's very dependent on the consumer spending. So when the consumer stops spending, the economy slows down. Um, that's going to be, what ultimately drives us into a recession. So then Thursday, we saw jobless claims was continuing, was a little higher than expected. Initial was a little higher than expected. So again, we're seeing a tick up in unemployment. And we also got these core PCE numbers. These were not as bad as expected, even though lower, they're showing as red. Those are inflationary measures. So the fact that it's a little less, again, says at the front end of the supply chain, inflation may be starting to abate. Personal income, again, we see spending, consumption, all negative. Again, PMI was a little below expectation. And here's what triggered the decline in natural gas, or one of the things that triggered that decline is the storage of natural gas was much higher than expected. When that came out, natural gas plummeted. There's also that LNG plant that's not going to come online until September. So when that came out, natural gas plummeted from heading towards 7 to now below 6. It got a little bounce on Friday, but we expect that to continue to decline now. So here's the other thing. Tanvir mentioned EVs. Hopefully you heard this Supreme Court decision that the EPA can't dictate emissions directly, so they can't control power plants, etc., in terms of their emissions. In my humble opinion, I think that's going to be bad for EVs and clean energy type stocks because they were counting on those constraints for selling those products as being a catalyst for clean energy. So we'll see what comes out of that. They're talking about Congress trying to pass something, but right now, I think that's going to be a negative tailwind or it's going to be a headwind for EVs and clean energy. Plus, we're going into a recession, and the EVs. People talk about Teslas. The problem, in my humble opinion, I'd love to have an EV. I'd like to have an autonomous electric RV to travel around the country. But bottom line is EVs are still too expensive. So if people have to pay for transportation, they're in a recession, they're going to pay for the cheapest transportation they can get. So I think that's also going to be a headwind for EVs. Again, my humble opinion. If you have a different idea, I'd love to hear about it in the comments in our Discord, etc. We can talk about it, debate it, etc. So then again, Friday we got this PMI data for June. This is an inflation number, and it was a little higher than expected. And I think that and the construction spending negative, the ISM number was worse than expected. So again, manufacturing is slowing. I agree, Tanvir, the high gas prices is an issue, but again, I think, people are going to complain about that, try to reduce travel, etc. EV cars are still pretty expensive. Their payback periods in years, probably still with the high gas prices. So again, this ISM data triggered a decline, an initial decline, fear of recession, triggered the bond prices to go up, etc. on Friday. So we saw a risk off at that occurrence, but then the markets finally did recover into the weekend. So again, markets closed on Monday. We can go flip over to investing.com, see what other economic data we have. and just quick reference, an easy way to find all these various links for all these tools is on our homepage, beachbumtrading.com, bum without the U. Scroll down to the links section. We have links to all these tools, all our social media. So if I want to get to investing.com, if I want to get to FinBiz, etc. Again, you can find all the tools, all the trading platforms, etc. that we typically use in the links categories on our homepage. Good morning, Walter. Thank you for joining us. Glad to have you here. So we look at the economic calendar for next week. So again, markets closed on Monday. We've got some durable goods. Factory orders, again, front end of the supply chain. Tell us a little bit if little indicators for a recession. Is it deeper than expected? We've got mortgages again. We have a lot of FOMC. FOMC's out of their what they call their quiet period, so they're out talking. They're all saying they're planning on a 75 basis point increase in July, so that's what everyone's expected. There's a few people, Kathy Woods, etc., saying they might cut back. I think a 75 is pretty much a given at this point. Again, that's my opinion, unless things get really bad. We've got more ISM data, so that might be a negative catalyst again. And we've got job openings, and we're hearing, you heard Facebook, Meta is cutting their forecast for hiring engineers. So we kind of expect the number of job openings and open positions to be decreasing. You also hear tech layoffs, so we'll hear some job cuts. And all of these, again, have a domino effect into the economy. So then we'll get jobless claims again. Average hourly earnings and payroll data on Friday. So again, there's a lot of potential volatility, and we'll look at the VIX in a few minutes. But be aware of when these data points are reporting, because again, they may cause significant volatility in the markets. So again, you can get at this calendar, investing.com, economic data, and you can find the link to it on our homepage. So I hope that helps. So similarly with earnings calendar, I'm not really going to look at it, but again, you can access the earnings calendar on that same page. I haven't got the Benzinga earnings calendar, the graphic version, but I typically post that out in our Discord. So again, I'll bring up our Discord so I can reference that in a minute. And again, you can find a link here in our social media to our Discord. If you're not already a member, it's free to join. We'd love to have you join the conversation in our Discord. So now we'll look at the markets in Webull. And just a quick reminder, Webull is still offering their deal for 6 free stocks. They started this with their 4th birthday. It's still ongoing. I don't know how long this will last. This is one of their best deals. Webull is our favorite trading platform. If you're not already using Webull, we would recommend at least get your 6 free stocks. You can cash them out and take the money if you don't like the platform, don't want to continue. But you can get your 6 free stocks. The first 2 are valued up to $300 each, and then you get 4 more fractional share stocks each for any deposit, each of up to $3,000. So this is the online browser version of Webull. I like to look at this markets tab. I like this histogram. It shows us, so Friday we had the more advancers than decliners, but it was small advancers. We have some significant decliners, so long rear tail there. And we see again the Nasdaq had more outflow than the NYSE. Last week we saw actually the Nasdaq had some inflow. Another thing you can see in this market screen in Webull is the near-term earnings calendar. I like you can see who's reporting when near term. You can also see dividends, splits, etc. if you want to. And then I like to see the performing industries and ETFs. We'll look at it for the week. So we see utilities positive, utilities, nat gas utilities. Construction was positive here, beverages mixed. Telecom, so communications negative, office negative. Oil and gas positive, energy's been generally positive, utilities. And if we look at the ETFs, so tell us, up or down on the indices. So we're seeing right now the indications are up on the Dow. Bull, so up on the S&P. Kind of mixed on the VIX. Up on the Russell. So right now they're betting up on the markets in general. Best industries is showing some healthcare, biotech, that's interesting, home builders, utilities positive, communication, energy, healthcare, so mostly positive. Again, this is all Friday, and Friday ended positive, so basic materials, technology, almost everything was positive on Friday. So that's not terribly indicative of what we're going to see. Energy, gas, natural gas, gold. We saw, an uptick at the last minute in gold, so that may be a swing back up in gold. Tanvir's asking if bond market's declining, doesn't that signal inflation peak fear coming down? Well, it's recessionary, right? And part of what people are saying about the bond market, and it popped up actually, prices popped up, yield popped down. People are saying that they don't think the Fed is going to be able to, stave off a recession, that a soft landing is not very probable. So I think many people agree. They've been behind the curve. Inflation's still running high. We're still getting a lot of indications we're in a recession or headed into a recession. And I think the bond market is saying, yeah, they don't believe the Fed's got it under control yet. So that's, again, my interpretation of what I'm hearing and seeing. It is very volatile. So you see these risk-off days where they just buy bonds. And that's a risk-off move, even though the Fed is selling bonds. So commodities, energy, natural gas, gold. We're in the futures. We're going to see some interesting trends now in commodities, and we'll talk about how we can potentially benefit from that in the longer term. I don't think we're quite there yet, but you'll see all the commodities pretty much have declined significantly in recent history. So here's the bond market. So we see pretty much they were all up this past week. And again, it'll be easier to see that in the futures, I think. Okay, so if I go to the futures tab in FinBiz, and again, we have another video that talks about this in more detail. I use this futures tab all the time. Usually have it up during the day. Before we do that, I think I'll go look at each of the indices. I can just look at the SPY. See where we're at. We'll zoom out a little bit. I think it's pretty obvious. We're still in a bear market. We've had a couple of these, violent bull rallies, and then we topped out. We dropped off again. We had another recent one, and then kind of a volatile day on Friday. But again, we're in decline. We're in a bear market, as all indications, and we're still in a decline. So we can kind of expect more of the same, these violent bull rallies. So again, even in this summer stock market doldrums, when you start to see one of these rallies, you can take advantage of it. Just know that it's probably just a bull rally in a bear market. Sell the rips. And again, with one of our past weekly trading game plans, the title was Sell the Rips. Take your profits and protect your profits, and then be prepared for a rollover down until we see a true capitulation, a true bottom. So I think we're going to see that in all the indices. Qs, the Nasdaq, very similar. Again, very similar behavior. The Dow, DIA. Again, they all look very similar. IWM, the Russell. Again, all very similar. And the VIX, which in FinViz you have to do at VX. So the VIX actually declined. It breached 30 just real briefly. It's still kind of hovering above that 25. It's kind of between 25 and 30, very indecisive, somewhat elevated. But even with these bad inflationary numbers, bad recessionary numbers, it hasn't really spiked up. So we're just not seeing true panic, true fear, true capitulation, which also tells us we're probably not at a bottom. So to really get that bottom, we need that capitulation. And you'll hear all kinds of guesses as to how far that bottom's going to go. I mean, we just watch it and play what we see on a daily basis. And again, if you're trading the stock market, summer stock market doldrums, you just have to play what you see. If we're getting one of these rally days, play it that way. When it rolls over, play the downside until we finally get a steady trend. Right now, this steady trend is down. So, and we can see that we're seeing lower lows, lower highs, etc. So the trends are all down, and then we get these violent bull rallies up. Again, the VIX is pretty much reverting to its mean. It's a little flat there, so it's indecisive. So here we see this nice rollover in oil. So it rolled over, that broke down below 110. Briefly, was almost approaching 100. Looks like it's downtrending. So it looks like we got a potential head and shoulders and a downtrend. So as we've talked about, for a long time, there's a number of ways you can play oil up and down. Up is gush or UCO. Down is drip or SCO. And very similar, we see this steep decline in natural gas. So it looks like, it rolled over, it's headed down. We saw a little bit of a bounce on Friday. But again, we've been playing natural gas for quite a while. Up, you can play BOIL, BOIL, or UNG. Down, we play cold. We're currently short position in cold. We've had that for quite some time, and again, these tend to be volatile. So, on Thursday, if you got on the cold and played that down and made a nice profit, I kind of expected that bounce, although it came out kind of early. You could do that with BOIL and just make sure you're protecting your profits, taking your profits, selling the rips. Good morning, Fonz. Thank you for joining us. Glad to have you. So now if we look at all the commodities, we see gold. It looks like it might be trying to pop back up. I'm not sure why silver declined the way it did relative to gold. That seems a little unusual. Again, we'll keep an eye. There's still opportunities in these golds at a relative support level. So if you're not already we're long all kinds of gold and silver already. But if you're not, there are a number of ways, and we'll show the ETFs for these various commodities in our part 2 tomorrow. We'll go over some of that. So then we see all these other commodities are declining, particularly copper. That tends to also indicate a economic slowdown, particularly a global economic slowdown. Is people often look to copper as an indicator of economic activity, and we see all the commodities are in decline except the agricultural is a little choppy, but all these corn, soy, etc., declining. Now I've been looking at these in a little bit of detail, and although they on these charts it looks like they've fallen off a cliff, they're still relatively high. So I think we've still got a ways to go for these commodities to bottom, recover from the Ukraine war. But I think, if we are patient and wait for that bottom and that swing back up, I think we're going to find some nice opportunities in these commodities as they go through their boom and bust cycles. We just went through the boom cycles, and they're more likely to swing back and over exaggerate to the downside, and then we may have some nice opportunities to long some of these commodities in the future. So that's kind of what we're waiting for. You see, lumber's already done it. It bottomed, and now it's bouncing and headed back up. So lumber was very high. It's been in steep decline. It looks like it may have bottomed, and it's now bouncing back up. So that's the kind of opportunity we're looking for in some of these commodities. And again, we'll look at a number of the ETFs that we have that we can play some of these. Then we see the bonds, like I said, the prices all ran up. Again, that's kind of a risk off, flight to safety, fear, buy bonds. Again, they're not believing that the Fed's going to raise interest rates above 3x%, right? Because if the Fed's going to raise rates higher than that, why would you want to buy a bond that pays 3% or less? So again, that to me that tells me that behavior tells me the bond market doesn't believe that the Fed's going to keep raising interest rates longer term. So we'll see. And it's a risk off move. Sell stocks, buy bonds. And the strong dollar is also contributing to this decline in commodities. So again, tomorrow we'll look at a number of the ETFs related to some of these and where they are relatively, what the risk reward profiles currently look like, and of any opportunities there may be in some of these areas. So this first article, so here's our strategies, how to play, how to trade the summer stock market doldrums. Again, the first article, and I'll put references. I couldn't put them in the description box, so I'm going to put all these references in a comment, pinned comment attached to this video, so you can reference them in more detail. So we can kind of look at a few of them very quickly. The second one, this one, how to beat the summer market doldrums. The main thing I wanted to take away coming out of that: stay away from riskier plays. Again, in the summer, you're going to have lower volume, lower liquidity. So he's saying, there's no reason to bail. We agree. We don't like the sell in May thing. We want you to stay in the markets and keep making money. It's just a matter of how to make money. So they're saying particularly strong in economic consumer discretionary. So again, but stay away from more speculative and come back in the autumn. And here's an article on gold. Again, I won't bring that one up, but you can read that they're predicting that summer doldrums could be ideal for gold, which maybe we're seeing the initial bump on that. So this, and again, you can read this in more detail. It has a little video, but it goes through some of the historical analysis saying, is this actually true that the markets perform worse in the summer or not? Essentially, he's saying, it's kind of a misnomer. Which all these historical, it's a generalization, so it's not always going to be true, but in general, and you can kind of understand people do go on vacation. They're more focused on other things other than the markets. So some of the other things that we wanted to talk about in terms of helping you trade these summer stock market doldrums is if the market is slow, if there aren't any trades that fit your particular strategies, or the liquidity is not there, the volume's not there, etc. Don't force your trades. And while it's slow, there's plenty of other things to do that will benefit you to help you make money in the future. So, use those slow times to what I like to say, sharpen your saw, which is hone your skills. And some things we want to suggest in terms of honing your skills. Is okay, so let's start thinking about what's next. And again, I'll leave these references to these articles in a pinned comment. So start thinking forward. So where are we going after this? We know we're probably going to go in recession. Interest rates are going up. Unemployment's going up, etc. As Tanvir pointed out, we're talking about gig type stocks, unemployment type. So if unemployment's higher, who's going to benefit? With high inflation, we see a trade down. Again, please reference some of the notes from our previous game plans. And again, there's a link to the Google Drive folder where you can access our previous notes for our game plans. We've been talking about, recession proofing your portfolio, how to trade inflation, how to trade recession, and it's all in those previous notes. So again, start, skating to where the puck's going to be. So where are we going to head after this? Here's an article about the election cycle and the fact that, it might bottom in the third quarter and then rally in the fourth quarter. So that's what this particular article is saying based on the midterm elections, what we might see, so we can prepare for that and set up our portfolios and trades accordingly. So some of the other things I'd recommend for sharpening your saw is review your trades. Hopefully you're already keeping track of your trades, and so you can go back and review them, review the performance of your various trades. And look for opportunities to improve. How could you do better in the future by reviewing your trades? Also, you could back test or test any new trading strategies. If there's a new strategy you wanted to check out, potentially test, well, this may be a great time to do that. Is you can collect your data, back test that strategy. If it looks promising, you could go into a small size, try that out, and see how that potentially may work for you going forward at minimal risk. And when the markets aren't too hot, too stressful, now may be a good time to do that. Also, performing due diligence on stocks. If there's stocks that you're interested in, you think you might want to invest in, you might want to trade in the future, um, dig in and do your own due diligence and see how healthy is this stock, how well are they going to survive the recession, what kind of inflation sensitive or interest rate sensitive debt do they have, are they going to have enough cash to survive? That way, when it presents a good opportunity, you're ready. You know which ones you want to buy. When we get near a bottom for that stock, or you get a near rational reaction to an earnings report or something, then you know, okay, yeah, this is a healthy, good company that I want to buy, and I'm just looking for an opportunity to do that. Is that Twilio? So I'll look at that for our live stream tomorrow, Tanvir. But my question is Twilio profitable? These unprofitable software companies, I wouldn't touch right now. Going into recession and the economic cycle we're in. So that's a generalization. I'd have to look at Twilio to see if they're profitable and how healthy they are. Technologically, yeah, the technology would make sense, but in terms of a company, are they profitable? So a lot of these high growth software companies are getting really beat up because they're not profitable. So another thing to do when you have time, and this is also a note to myself, and I need to find more time, is automate your processes. What can you do to automate your trading processes, or any of your other processes, to make yourself more efficient and effective, so that when a good trade presents itself, or even to alert yourself on trades, we can't watch everything, so how do we get alerts on the setups and the types of trading strategies that you want to trade? How do you know when that is conducive? So again, that's something we've been working on for many years, but we have a long way to go to make our trading processes even more automated, more efficient. Um, and we do have another channel, virtual consulting channel, where all the automation tools, etc., that I use, I'm putting how-to videos, etc., tips and tricks videos, and an automation playlist on the virtual consulting channel. So you can see those. There's a number on how we use Zapier, etc. So I'll probably do more on some of the other automation tools that you can use to automate your trading processes. So what if I just what if I just throw 5K in Q and SPY during the recession? Well, in the long run, right, the markets always recover and go up. The question is how long will it take? And as you'll see tomorrow in our part 2, what we use in those regards is VTI, which is the total market index that covers all the markets. So we're not as sensitive to just the Qs or the SPYs. So again, if you come back tomorrow, we'll talk about how we've been trading VTI. So, and we'll look at the risk reward profile for that. Those have to go to do not have to. Those have to go back to all-time highs as stocks do not have to correct. I'm not sure if I understand that particular comment, but again, we'll talk about, the VOO is one that's SPY only. You could just, if you want to bet some money on just the Qs, just the SPY, just the Dow, you can. A good ETF for just the SPY is VOO. Again, we like VTI better. And it's VTI, Victor Tango Indigo, is the Vanguard Total Market Index, and it covers like 4,000 stocks. So again, we like it. It's pretty stable. And again, if the tech-heavy Nasdaq goes down one day and the SPY or the Dow go up, then again, it's relatively stable. So And they just paid out a nice special dividend that we collected, so that was nice. So does anybody else have any other questions right now? Otherwise, we can cover, again, additional stocks, individual stocks tomorrow. If you have any, you can always put them in the comments to this video. Again, here's, you can get the invite to our Discord. It's in the description box below. It's also in the link to our home on our home page that triggers that invite. So you can hit us up on our Discord. We also have a Facebook group. So please let us know if there's any individual stocks you would like to look at for our game plan tomorrow, or do due diligence on. If there's any other ways we can improve the value of these weekly trading game plans for you to help you succeed in your trading, again, just let us know. Join us in the Discord. Let us know how we can improve, etc. And we also have this survey on our community tab on our YouTube channel as to what's the best time for everybody for these weekly trading game plans on Saturday and Sunday. Last I looked, 10 a.m. was the most popular time. So please vote on the poll on the community tab on our BeachBum Trading YouTube channel. Let us know what time is the best for everyone. So yeah, 10 a.m. is currently still the overwhelming favorite, but we still don't have a lot of votes. So please vote in the poll and let us know what's the best time for everybody. So again, if you're not already subscribed to our YouTube channel, we certainly hope that you will choose to join us. Join our BeachBum Trading community on YouTube channel, in our Discord. Here's an example of our Discord. So, and again, please let us know however we can help you succeed in your trading. And hopefully we'll see you all back tomorrow for part 2, where we'll talk about what stocks we're putting on our watch list for next week, for the week of July 4th through July 8th, and what our strategies and thesis for trading those stocks will be. Otherwise, again, enjoy the rest of your Saturday and your long 4th of July holiday weekend, and we'll see you all tomorrow. Thank you.